What's up everybody, it's Ben. Now let me ask you a question. Do you want to be forced to work until the day that you die? Now I'm hoping the answer to that question is no. And if you did answer no, you need to find a way for your money to make you even more money. Now this may sound extremely difficult, however I promise that if you watch until the end of this video, you will have a much better understanding of this process than you did before. One of the great things about today's technology is that you can start this process even from your phone with an extremely small amount of money, like $500, $250, or even $100. So no matter what your current financial situation is, you can start putting your hard-earned money to work for you today. Now if you do enjoy this video, I would really appreciate it if you would hit that teeny tiny thumbs up button below and subscribe to the channel if you're new. I really appreciate the support, and it helps YouTube to push this video out to more people. Now the first thing that you need to do after getting your $100 or $1,000 or whatever sum of money you're going to use is to open your brokerage account. This is super duper easy and can be done even in under 30 minutes. Three brokerages that I really personally like are TD Ameritrade, Charles Schwab, and Webull. All of these can be found online and are super easy to open up. Before signing up for an account, you need to understand which type of account to open. There are many different benefits to each type of account that you may end up opening, and we're not going to be breaking down each one in today's video, but I'm happy to do that for you guys if that's something you may be interested in the future. So if that is something you are interested in, please do let me know in the comments and I'll make sure to make that happen for you guys. Now I will say that if you're just investing a small amount of money and you're trying to keep it simple, just to open an individual account, there's not as many perks with this type of account. However, there's also less restrictions. On top of that, there's really no harm if you do want to open a different type of account in the future. You can simply withdraw your funds and transfer them over to that account. So after you have your account opened up and your money deposited, you need to actually understand what to invest in. Now at first glance, the stock market looks like a really menacing place. There are stocks, ETFs, REITs, and many other things that can be extremely confusing as a beginner. Today, we are going to keep it extremely simple and break it down in the most understandable way possible. One really big thing that you need to make sure that you do is to diversify your portfolio. Now I 100% understand the fact that if you have a very small investment, breaking it up may not seem very practical, but the goal here is that this is just the start of your investing journey and that you continue to contribute more even in the future. On top of that, there are a number of great ways to diversify your portfolio that don't even require you to split up your money. Fidelity, Invesco, and Vanguard all offer great funds that are very diverse. Now the type of fund that I'm going to be specifically talking about today is an index fund. Now an index fund is a specific type of investment fund that is based on a certain market index. Now these market indexes are things like the Dow Jones, the S&P 500, and the NASDAQ, and they're really just designed to track a specific group of stocks. However, the problem here is that you can't specifically buy into these market indexes themselves. So before index funds were really a big thing, you had to invest in all the individual companies by yourself. Now considering the fact that these market indexes can be made up of even thousands of different companies, you can understand how difficult it may be to buy each individual one. So essentially when you buy into an index fund, you're getting this wide variety of different stocks still at a very low price. Now this brings about the issue that some of the shares of these index funds may be priced a bit over $100. However, a lot of brokerages that exist now actually do offer the option to buy fractional shares of different companies or index funds so that you can still purchase this index fund even if you don't have the full $300 or $500 that it may be priced at. The first of these index funds that I really suggest that everybody look into is the Fidelity 500 fund. Now 26% of this fund is made up of technology stocks including things like Microsoft and Apple, where roughly 15% is made up of healthcare stocks including things like United Health Group. This is almost exactly on track with the diversification that the S&P 500 has. It also has a very large makeup of different financial, industrial, energy, and many other stock groups that it is invested in. Now this diversity really lowers the risk of your investment, considering the fact that if in the very rare case that one of these very large businesses does go out of business, there will likely be another to keep the fund relatively stable. The second fund that I really suggest that everybody look into is Vanguard's Total Market Index. Now this fund is very similar to Fidelity's fund in the sense that it is very diversified, but it does have some minor differences. Now this is because it does focus on the US stock market as a whole and not just the S&P 500. Approximately 24% of this fund is actually made up of technology stocks, and this is very similar to Fidelity's fund that we spoke about earlier, with the top holdings also being in Apple and Microsoft. Now on top of that, approximately 14% of this fund is made up of healthcare stocks, with their top healthcare pick being United Health Group. When you start to break down their smaller categories of investments is when you do see the bigger difference between these funds. However, even though these categories are very small, these may be billions of dollars worth of difference. Now these are the only two funds that I'm going to be specifically breaking down in today's video. However, there's also a lot of other good funds out there that I do suggest you look into as well. Now once you do begin your investing journey, you may find that it's a great hobby for you and it's something that interests you, or you may find that it's something something mundane that you really only do just to build your wealth. Statistics show that under 10% of professional investors outperform the market. This meaning that if you invest in index funds, you do have a very good chance of outperforming professional investors just by buying into these funds and holding them for 10, 20, 30, or even 40 years. There is one last thing that I do suggest for beginner or pro investors to invest in, and it doesn't even require any money. And this is to invest in your knowledge. And like I said, it doesn't matter if you're a newbie or a pro, there are always new things that you can learn to grow your wealth, and they can all be done online for free. Websites such as Investopedia have a wealth of knowledge that you can learn for free, and the only thing that you really have to invest here is your time. I really hope that everybody was able to take away something from this video. I really believe that whatever stage of your financial journey that you are currently in, there is something that everybody can learn. I really appreciate everybody who did watch until the end of this video. If you are new, I would really appreciate it if you would subscribe to the channel. It is completely free, and I post 2 new videos each week that you're not going to want to miss out on. I hope to see you all in the next one.